Okay, howdy everybody. It's Mr. Ed back with another really cool trading video. Hope you guys like this one. This one I was playing with on Friday on crude oil. I haven't traded crude oil in a long time. Been focusing on the S&P, but I was trying out this new trading room on Thursday and Friday, and they're trading crude oil and they're trading, the Nasdaq and all that. So I figured, you know what, I'm going to try this. I'm going to do this. I'm going to play with crude oil, just simming it, just to see what happens. So I've got a blank chart here. It's just a Delta 250 volume chart. This is my standard go-to chart that I use for a lot of stuff. So what am I? The first thing I see on this chart, is that right there, which is pushing up. It's pushing up. But how do I know it's going to bounce there, right? I mean, so I'm sitting here at, say for example, I'm sitting here at midnight, start seeing this nonsense, right? So one of the first things I do, I'll put the indicator on the chart. One of the first things I do is I'm going to put this guy on my chart, and that is VPOC per bar, and all that is my just my little order flow indicator, okay? And the only thing I got turned on here is buying exhaustion, selling exhaustion, and VPOC. And you can see VPOC is a line here, so you can kind of see the trend, right? So you can see the trend. You can see where there's your buying exhaustion. You had buying exhaustion, and then it just topped out right there, right? Well, are you going to trade off this one? Are you going to trade off one indicator? Well, maybe. Maybe so, maybe not. Okay. I'll tell you that the strat, which I like to trade the strat. The strat had a entry right there at 75. Sorry, that was 79.19. Well, let's put something else on here. I was playing with this on Friday. I wanted to show you guys this thing. And what it is just very simply, it's a volume profile, a 5-minute volume profile. Okay? And all I'm doing is I'm going to show you value area high, value area low, and these lines are just VPOCs, right? They're just, that's all I'm looking at, just looking at VPOCs, right? Because we know that price tends to be attracted toward VPOCs, toward those high areas. You may not want to trade off of them, but they are, the price is concentrated on them. Well, now the first thing I kind of noticed was that, and I'll enlarge this chart. Let me see if I can zoom in on it a little bit so you guys can see this. Let me go to the end here and then slide it back. There we go. Okay. So first thing I noticed, and I'm looking at like, say for example this big swing here. First thing I notice is everything on the left-hand side of the bars is going to be areas of potential resistance. So you're going up into this stuff, okay? So those are potential, or in other words, potential targets for long trades. Everything on this side can be potential for short trades, or instead we're trading on the right-hand side of the chart, right? So what we're looking at is price coming up. Say for example, came up and it took out this guy, right? So there was a VPOC there. It disappeared because I've got it basically set to draw these lines until you hit an intersection. Okay. So what happened here? You got a buying exhaustion there. You got, if you look at that little line right there, that is value area high, and then here's value area low that comes back through that. So let me turn these on for hollow so you can kind of see what's going on here. And you can color these bars, by the way. It doesn't have to be hollow or not. You can change them a little bit different shade so it kind of stands out. So what would I be looking for? I'm looking for VPOCs up here, right, as targets. I'm looking for, and you can see where there's little bitty, you can see a little bitty VPOCs here that are taken out, that are formed, and then price action comes down to take them out, right? Well, those are potential long entries. You've got a long entry here. So you've got a VPOC that's formed on that bar, which is right there at right around what 78.46, 78.47, something like that. 78.47. It comes down, takes that VPOC out, and then forms a selling exhaustion right below it. Okay, there's a great long entry to the upside. Here's another one. Here's another one. There's one behind that. Here's another one. This one comes down. It didn't take it out. So this is just a continuation. And here we go up. So you could look at that as, say, for example, continuation trade if you wanted to add onto your contracts. As it came down, you see it took out this area here. What happened? Well, it formed one right there. So what that tells me is, it forms it's on the right hand side of the chart. We're going to go back up, so I could reverse my position if I was short anywhere up here, and then ride that all the way back up here. Where's my target? Right there. There's a target right there. So I take that out. I can see this action right here where they're trying to push up. They don't take that VPOC out. They're trying, but they don't take it out. So there's a lot of people in here selling. The sellers eventually overwhelm the buyers, and you can tell that right here, that right above that 79.28 area. And what happens? Here we go. Here's value area high, up here. What happens? It just basically sells off. Okay, you're seeing these at the tops of the candles where these things get taken out and then turn right back around. They take it out, turn right back around. Well, so say for example you get into the short here. Okay, whatever chart you're on the short. So what happens? Where's your target? Well, you can take any kind of target you want. Anywhere where these guys come across, you could look at. There's a potential target there. It took that out and then came back up. So once it takes it out, what happened? There was one tick above that formed right there. So you could take this guy. Once this is taken out, it's no longer valid as a target. You could have taken it out right there if you'd have shorted. Use that as a target there because it hadn't been hit yet. It comes back up here. You could short again. Short back up here again in this area. It comes down. Where's your target? Well, there's one target at 78.82. If you were short from, for example, up in here anywhere, 79.29. There's, there's $400, $500 trades all over this chart. There's one right there. There's a target, 78.82. There was a target right there for VPOC. What happened? It comes down, takes it out, right? Comes back up, spikes back up here. Here's another VPOC up here where it formed on the right-hand edge of the chart. When you see it on the right-hand edge of the chart, and your price is coming down, you can usually look at those for either continuations if you want to add another contract, or you can look at that as a re-entry trade. So here we go, we're coming down. So there's your $400 trade right there. You could, okay, I'm done for the day, whatever. Okay, that's, and you're looking at 4 o'clock in the morning. If you'd gotten in anywhere up here, anywhere between 11 o'clock and 3 o'clock in the morning, because it just sat there and went back and forth here. It's going to break one way or the other, and you can take an educated, I'd say an educated guess, but it's not really, because you're pushing down here. You're making a lot of ragged stuff down here, so it's not, you're not really getting stopped. But right here you're getting stopped. There's everybody's, you can see people piling in the market to buy, but there was no buyers there, right? They just got choked off. They got cut off. Here's all your VPOCs here. So what happens? We go down. We didn't even touch this guy. You know, at 79.34. That VPOC. Didn't touch it. Comes down. Comes down. There's your first target. You got targets all the way down here. You could basically sit there and bounce this guy. Okay, here's an exit for the short. Get back into the short here. Come down. Exit. There's an exit for the short. Exit for the short. It didn't come back there in time for you to get back in this guy. You could you could take the entry here if you wanted to. And here we go. So you could ride that down, and you could sit there and work these levels back and forth between these VPOCs, back and forth as they form. On this side, you take the short, come back down here, and then you can use these as target areas. There's another target right there at 76.86. Well, okay, now what happens when we turn the market around? Well, all of a sudden these guys disappear. This side, there's nothing down here, nothing across here. There's no VPOCs. There's no nothing. What happens? We start making him appear, but he gets choked off up there. There's a double top. There's your buying exhaustion right up here. There's your short continuation right there. Comes right back down. Short continuation right back down. There's a short right back. There's a long right there, and then there's a short. It forms over here, long, short. Okay, and then comes right back down. Now you're seeing at 75.57, you're seeing a selling exhaustion, which you saw here, you saw there, you saw there. You were starting to see these selling exhaustions at the bottom of these candles. Okay, so the sellers are getting tired. Well, now all of a sudden they're starting to form these guys, just like they did over here in this area. See what they did over here at this area? There's a VPOC there. Came back down, retested that VPOC, took it out, retested. There's longs right in there. See where they have those shorts right in there? Those little bitty things in there. There's a short right 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 there. Okay. And there would be, say for example, your target. Okay, you just formed here, one here, no entry here because you didn't have a retest. So he comes back up here. You get a buying exhaustion here. Comes back down, forms a VPOC, takes it out by what? A few ticks. You're looking at 78.47. You're looking at 78.43. So you've got a 4-tick stop, or 4 or 5 tick stop there. At the bottom of that candle, you'd have it. You weren't taken out. You came within a tick, but you weren't taken out. Or you wait until it forms there. You're looking for that VPOC right there. Just got taken out. Now you're looking for a signal down here. Selling exhaustion. You can take it between the selling exhaustion and that forward VPOC. Here we go. Here we go. Up, 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 up. Now we see it on the other side. You see these being formed, taken out, formed, taken out, formed, taken out, down, down, down. Here we go. Here we go. Here we go. Nice down move. Nice down move. Nice down move. You could sit there and play this back and forth if you wanted to. There's one for the there's one came back. It probably formed. It might have formed as we came back down. I don't know how much volume we were looking at right there, but there's one right there. You might have gotten taken out on if you didn't keep your stop. If you kept your stop tight, you might have gotten taken out. I would, I might have played that for 3, 4, 5 tick stop, and I might have gotten taken out depending on when that formed. When that formed, that's my kind of line in the sand. Right there it formed. I'm sorry, that formed on the up bar, right there. So there's a short in there somewhere. I know there's a short in there somewhere. I just need to find it. Okay, so I can look over here and say, okay, fine. It kept going up. Where's it going to potentially turn around? I could wait, come back up, or and what I would have done probably in that situation. I couldn't tell you right now because it's not real time, but what I look for is, again, here's and I forgot to turn that off. I forgot to turn VWAP off. I'm sorry, that clutters it up a little bit. I would look to see, here's my line in the sand for the short. Wait for it comes back up here, and then as it comes down, take that short. Take that short coming down. There's another one. Line in the sand, wait for it to come back up, and then come right back down through it. There's my short, and that's your target would be either here or here. See those lines coming across? See those lines intersecting? That would be your short target. So if I took the entry there, that's 76.05. I got a target of, what is that? 75.73. Okay, so that is what? $300 per contract right there, with very little, with not a whole lot of risk. And if you saw that coming down, one of these days I'm going to replay that, take a look at that. But it came back up. You see where it spiked up here? It formed there. There's the VPOC. It formed, came up. We know it came up here. There's your high, and then it came back down. That's where you'd have taken the short. So take the short, take the short, take the short. Anywhere down here, anywhere is your targets. You look on the left-hand side for your targets, left-hand side for your targets. And then here's your entry for the long. There it is right there on the right-hand side of that bar. Okay, coming back up, there's your retest because it formed on that bar. There's your retest right there, retest right there, retest right there. Nice long bar. There would be a potential target for the short. Retest there, retest there. There's your target. There's your target for the long. Turns back around. There's your target for the short. Okay, there's your entry right there. Very little risk. Target for the short right there. That bar, that VPOC right there. Comes back up. There's your retest. There's your entry. Your entry for the short trade. Again, you can get back in your short. Okay. When you start seeing stuff down here, anywhere you can get out, anywhere in here. It doesn't really matter. Come back down here, you start seeing this action, this kind of action on these up bars. Get the heck out, man. Get the heck out of that short. Reverse off that short. Reverse into the long trade. Here's your retest. Here's your pullback entry. There's no pullback entry. It probably formed back down here and it went north. Came back down here. There's your selling exhaustion, which is at value area low, by the way. There's value area low. Comes back up. There's your entry for the long. You can ride it up. There's nice. You could take it out there if you wanted to. Nice little chunk of change. You could keep going. Just let her go. Let her go. You've got target. You got a target right there. You got a target right there. You got a target right up here, but it didn't hit it, right? Well, how do you know? Everything turned around. Oh crap! Here you go. You start seeing. See that VPOC right there? You start seeing that volume point of control right there. Oops. Get the heck out of that long trade. Reverse into the short. With, not a whole lot of risk. I mean, you never pushed up here. Not a whole lot of risk. And you can see as that value area high turns around and starts heading down. What does that tell you? That tells you, we're going back down. Get out of the long. If you hadn't already gotten out of the long when you start seeing, you could have gotten out of the long here. When you start seeing that, you could use these as potential targets here, or you can get out right there, wherever you want. I mean, what I'm trying to point out here is not making the maximum amount of money, but what I'm trying to do is pointing out where you can use VPOC on these with this 5-minute candle or on a 5-minute period to basically give you all kinds of profitable trades here, and those all made money with not a whole lot of risk. So turns around here, starts coming down, back down. If you come down here, if you're looking at a target, there's target number 1. You can use that as a target number 2 if you like. Target number 3, target number 4 if you're trading multiple contracts. Use these. You can use these as targets. There's a great. Oh, look at that pullback entry. Look at that fantastic, beautiful pullback entry. Look at that sucker. Look at that right there. These are all pullback entries, but I'm not getting a signal there. That is a great pullback entry. You've got buyer exhaustion. You're seeing buyer exhaustion right there on that at a VPOC. That is an absolutely beautiful short entry. And what did it do? Bam! Almost zero risk. Almost zero risk right there. And it came right back down. That would have been what I would be looking for all day. I'd be sitting here all day long watching this thing going, okay, where do I have that perfect entry? Perfect entry right there. Absolutely perfect. Buying exhaustion into a VPOC. Bam! Comes right back down. No risk at all. And there we go. You could take it off. Take it off at the former VPOC right there. Boom, right there. You're looking at 76.59 if you're trading during the day. 76.59 to 75.84. That is what, $600-$700 contract, $600-$700 move right there. You're done. You're done for the day. You made your money. You can go away and the heck with all this other nonsense. So comes back down here, forms one here, that gets taken out. Forms right here, and what you're looking for is stuff like that. If you're looking for a continuation, because these usually mark these where price action comes back. There's your selling exhaustion here, right here. Forms that VPOC, comes back down, but it never comes close to it, right? So that's a pretty darn higher probability trade if we know that price action is attracted to VPOCs, right here. Well, why would it not come down here? Well, because the buyer stepped in. Lots of buyers right here, probably at that VPOC. Lots of buyers came in right in here, right in this area. I'd have to turn the bars on. I turned them off because you've got to usually on a volume profile you can see your bars and stuff, but I turned them off because they get a little bit distracting. You can turn them back on. It's not a big deal. But here's your long trade right there. Here's the pullback. Gee, you didn't even get a pullback. You could have gotten out there, but where's your pullback? Your pullback could have been anywhere in this area. You're looking at you're looking at that VPOC, moved up, VPOC right there, came right back within it like a tick. I think it touched it, didn't fill. So there was no indicator there anyway. But anywhere in here where you see these dips, so you know the trend is starting to change. So anywhere in here, say for example you want it took it out right there at 75.41. You could have gotten into the long trade there. The stop would have been like 75.31. You might or might not want to take that. But once it hit it, came back down, and then went back through it, you could have taken it at that particular level right there. And come back down again. There's a little bit of a pullback there. It's 35. There's a 6 tick. There was 10 ticks there. There was like 6 or 7 ticks there, and then back up. There's you go to the upside. Where's your targets? Target there. Target there. And then we hit there. We're starting to look at that area right there. Now you're going short. We started, you've started hitting targets there. You hit a target there on the short. Came right back up here. Okay. We may be in for more short. I'd have to see what's going to happen at 6 o'clock. We may be in for more short simply because it came up here. It formed that VPOC right here. It came back up to it, but it couldn't touch it. What happened? Buyers. The buying exhaustion came in right there. Sellers came in, slammed it down right there. So once you start getting used to this stuff, you can see very, very clearly what's going on. Very clearly what's going on. Right here, that's where it took it out. Nice shorts, long target there, and then formed on the left-hand side of the bar, which means a short. Came back up, didn't even touch it. Came close, didn't even touch it. Came within 10 ticks and then sold off. So, my opinion, worth what you pay for it. I think we're in for more short action when Globex opens. My opinion, worth what you pay for it, guys. Anyway, I hope you enjoyed this video, and happy trading. Hope this helped you I'm going to put this out in the free area, and I'll put this down in the comments where that, again, where that free area is. I'm going to put these, this is VPOC bar. All this is my standard study, where all I've done is turn, everything else is just set to ignore. I've got this set for VPOC, and I've got this set for buying selling exhaustion. That's pretty much it. You can see the buying exhaustion selling exhaustion ratios to see how strong those are. If you want to, you could put those, on the chart somewhere to just to watch those, or you can go through and say, with this guy, chart values window, you can go through this guy and just scroll down and find out, okay, here's my buying exhaustion, here's my selling exhaustion ratio. Selling exhaustion, I had a buying exhaustion up here, and then I have a selling exhaustion up here, so that's pretty strong. 6.6 selling exhaustion ratio. So, we might have hit that. There's a target there, and then it hit the up, and then it hit the one that was above it. So we may pop up for a little bit, before we see it sell off. But again, if you took that right there, there's a VPOC hiding. See the purple, which is hiding behind that VWAP line right there. If you wanted to take that long trade, there's your target 1, target 2, target 3 up there. So there's money to be made in these markets, let me tell you. So anyway, like I said, I hope you enjoyed this. I hope you can use this to be profitable in your trading. Until next time, see ya.